What's up, guys? Welcome to the Next Win podcast with your host, Aunt Ma, and me, the co-host, Justin Vaseur. And we got some crazy topic today.
Yes.
Yeah. But before we go into that, a word from our sponsors.
Today's sponsor is Zinju Chili Oil, a crunchy garlic chili oil, a.k.a. Chili Crisp.
And Zindru won the 2022 Scovie Awards. They got first and third place, right?
They got 2 awards. OG Batch is the normal spice level. They actually got 3rd place. And then X Batch was their spiciest. For all you heat lovers out there, got 1st place in the Scovie Awards.
Wow. And they're also vegan, right?
They are vegan. And also, Zinju Chili wants to send you guys a free 9-ounce jar. All you got to do is cover shipping. Go to their website, zinju.com, or click the link in our description box below and use the promo code WINNING to get your free 9-ounce jar. Thank you, Zinju Chili Oil, for sponsoring this video.
Right now, there's a lot of talk about the recession.
Are we in one?
Are we in one?
I don't know. We'll get to that.
Yeah. So, is it a good time to invest during this recession? Is it also risky?
This could be the best and the riskiest time to invest in real estate or literally anything. And I say that because, well, everyone knows it's always risky when you're investing something.
Yeah.
And I feel like the more you gamble, quote unquote, is when you make the most, right? Because when you're not comfortable, that's when it's really worth it.
Mm-hmm.
That's when people see the significant change.
Right.
So I definitely think whether we're in a recession or not, because things have gone down in terms of the real estate market, stocks, crypto, it is definitely the best time to buy these dips. Risky? Yeah, because are we in a recession right now? I don't know. We could be heading towards a recession. We might be in one right now, but they haven't informed us or said, yes, we are in a recession. So what's risky about that is, if we're not in a recession right now and we're headed towards one and we bought stuff right now, then the risk is that it went down way lower than what we just bought.
I see. Okay.
Right?
Yeah.
So that's the risk. But if we time things correctly and we think we're headed towards one in they're going to announce it in a month.
Yeah.
It's perfect timing, dude. That's the best.
Yeah.
You know what I mean?
I guess it's also risky because you have the potential to lose your job and all those things too. So buying a house right now with the potential of you losing your job is going to put you in a bad position during the recession.
Here's the key.
Okay.
We are talking about investing.
True.
So when you invest, you spend money that you have. That's not going to cause you trouble.
I see.
Right?
Mm-hmm.
If you're buying something because you need a house to live in, or you're going to use all of your money that you're going to eat lunch with to invest, oh man, yeah, you might lose it all.
Mm-hmm.
You know what I mean? You got to play with money that you're okay with.
Mm-hmm.
Yeah.
So, what are some real positive, I guess, opportunities that you can kind of foresee or, I guess we should have our eyes open to during the recession?
Real estate. The reason why it's the best time right now is because prices have dropped 100,000 since last year, meaning that at some time last year, people really thought the house was worth 100K more than what it is today. So at some point, it's going to get back to that. And when it does, that 100K is going in your bank account when you decide to sell. So if you were to buy a home right now for less and you sit on it, then yeah, I think it's a great investment, right? So real estate is really good right now. Not only do you get to sit on some equity and get a great deal, there are third-party companies out there that are like Zillow and a bunch of other companies that buy homes to invest in because they have the data, right?
Right.
And they didn't calculate their data right and foresee some sort of correction. So in August, June, July of last year, during the summertime, they bought at the highest. Let's just say they bought a house for $500,000 in the summer last year. Right now they're dumping for like 410, 420, $80,000 less. These are steals. Even though they calculated wrong, it's still a steal because at some point it'll get to that again.
Yeah.
It's just when? 2 years, 5 years? I don't know. No one can tell you that. That's why this is where the risk comes in. No one ever knows what's going to happen tomorrow. We can kind of guesstimate, but we don't know. I can tell you, hey, the rates are going down to 3% in 2 years, but shit, all we know is that it could even go to 12%.
Right.
Right?
Yeah. So what are some things that people can do to find a good investment?
To find a good investment?
Yeah. As far as real estate goes.
That's the hard part. You can't just buy a home and then think you're going to rent it out or Airbnb it out. You have to find the good deals. Finding good deals is hard. Everyone can't find a good deal. Everyone can buy something, but they can't find a good deal. It's calculating the numbers. And so you have to have a chart where you can input, your ROIs and just pretty much everything on that list, right? So when we're talking about finding a good deal, we're talking about something where we're kind of buying a home off a seller that has been struggling, who has a real reason to sell for low. They need the money, or maybe they don't care. They inherited the house and they just want to dump it. You got to find those kind of deals. It could even be foreclosures, short sales, pre-foreclosures. Those are all great deals too, but those are also the most headaches, the most work, right? So if you're the average Joe, the everyday person who doesn't have someone that can help you with construction and flip homes on a short sale and foreclosures that are, torn up, then yeah, we can find deals where the seller just really needs to sell. They're all over the place. It's hard to find because you're talking about finding this diamond in the mountain. Right. So I don't even know why I said mountain, because I watched the movie Blood Diamond and they're literally in the water with a strainer.
I was like, that's funny.
Yeah, I just meant I was picturing a mountain in a pile of dirt and stuff. But yeah, so you can find deals through those sellers. That's probably the best bet. But what really happens is these deals are a long term, right? I'm not talking about short term with these flips and buying fixer-uppers. I'm talking about for the long term. So if we're going to buy a home for $100K less than what it was last year and we hold on to it, in a few years, you're going to make a couple $100,000, hopefully, in the right market. So that's why it's the best time to buy, these rentals right now. But what's risky, because if people don't have jobs or they don't have money to spend, who's going to rent a house from you?
Right. Especially like during the recession.
Exactly.
Everybody's going to be.
It's like, I'm moving back to mom's house.
Yeah, exactly. Damn.
Yeah.
I have a question for you.
Yeah.
And this is kind of maybe a little off topic.
Yeah.
You were talking about long-term investment.
Yeah.
What's the benefit of holding a home full-term?
Equity.
So
equity in two forms. One is if you hold it long enough and it gains equity and you sell for, a couple $100,000 later, you get that instant cash, right? Minus your taxes. The other one is if you still hold it while the equity increased, you can increase your rent. So let's say when you first bought this, $300,000 home for rent for $1,200 a month, and now all of a sudden 2 years later, your home is worth, $500,000, and the rent is now $2,400 a month. You can increase rent because everyone else in the neighborhood who just bought homes, that's what they're paying for their mortgage. That's what they're paying for rentals, things like that. So when you can start increasing rent to match the market, that's when your cash flow really starts coming in. Now you're making $1,000 a month. So it's holding long term and then increasing that rent. That's what I like for passive income and cash flow. I don't want to flip it and keep that $200K. Maybe initially on the first few deals, that's what I want to do to buy more homes. But I want to get to the point where I don't want to sell any of them.
Just generate that cash flow.
Yeah, just wait until the market goes up, raise rents because you're matching everybody, you know,
Mhm.
not because you're being a bad landlord and you're trying to be greedy. If I had a tenant for the last 5 years and they were the perfect tenant, if something broke, they fixed it. They don't call you. The rent comes on the first of the month every time. I might keep them and never raise rent.
Yeah.
You know what I mean?
Yeah.
Because
Of
they're
course.
taking care of your house.
Mhm.
It might be better than when
Oh yeah.
than
For
you even
sure.
started renting it out. You know, they shine it all the time. They mop it. They're a clean freak. No pets,
Mhm.
right? And so I might keep them and never raise that rent, even if it's 5 years down the line.
But if your spot is open, then you kind of adjust to the market.
Exactly. Yeah. If that person was like, hey, you know what? I got to move or I'm getting married or whatnot. Sure, I'm sad to lose you. You got any relatives that want to rent
Yeah.
out first? But if you can't find anyone and it goes back into the market for rentals, yeah, I'm definitely going to raise it.
Mhm.
Yeah. Let's say we're in a recession right now.
Yeah.
Everyone's freaking out. They're not going to the movies. They're not going out to eat. Everyone's save money,
Yeah. Everybody's trying to save their cash.
right? For me or an investor, I want to spend money, not on the restaurants and the movies, but by buying something
On
as-
assets.
on assets, whether it's a house, crypto, stocks. Right now, I want to buy something because I want to take advantage and I want to benefit from it.
Mhm.
Even if we're not in a recession and it might go down a little bit more later or even crash,
Mhm.
whatever's. But when you zoom out from 50 years, you know you made the right decision
Right.
because things grow over time. So I want to buy something right now. I'm itching, dude. It's like I want to go to the casino and gamble, but instead I want to gamble by buying assets.
So like with the housing market, is there anything sort of kind of like a graph for crypto? You can kind of see how it's been trending and all that stuff up and down. Is there anything like that for the housing market where you can kind of see where we're at compared to past history?
I'm sure there is, and there's strategies for it, but not as it is for crypto and stocks.
Mhm.
And I don't even know how to graph that out when I'm doing stocks and cryptos. I just buy what I believe in. I know for you, you do more of the graphing and you understand it.
Mhm.
I don't. So I'm the wrong person to ask about that. But I'm sure there are things that they use, but it's not like how you guys use it.
Mhm.
Like right now, is it the best time to buy stocks and crypto?
I would say it's a very good time to start looking into it and start maybe buying the dips.
What does the graphs tell you when you're trying to do it?
It just makes you look at the past history and see where we're at in terms of levels and price history.
Have you drawn a new line?
Have I drawn a new line?
Yeah. Like, don't you draw new lines every so often?
There's certain indicators like there's support levels and then resistant levels. That's really for, I guess, day trading, swing trading type of stuff.
Okay.
But you don't really need to draw lines if you're just looking at the trends in the market, really.
Right.
At least from what I'm learning. You know, some people might say different, but some people don't even trade with those indicators. They just can see from the graph where we're at. You know, obviously, if it's at the peak, they don't really want to buy, or they might short it at that point. But if we're at a level where in the past history it's known to bounce back up or anything like that, then usually they start to look into buying those assets.
That's like me. When I look at these graphs and there's multiple peaks in this amount of time that I'm looking at, and when I see this red line going down, I'm like, buy, 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 buy.
Mm-hmm.
I want to buy. But when I see it going up in the green, I'm like, no.
Yeah,
Because
yeah.
you know it's going to go this roller coaster up and down, like these hilltops.
Mm-hmm.
You know, I would say right now, one thing that I'm keeping an eye on is just Tesla stocks.
Mm-hmm.
They keep going up and down. Like every other day goes up and down $20 to $40.
Mm-hmm.
You know, and when we're putting thousands of dollars in it, that's a lot.
Yeah.
And you could do that every single day.
Mm-hmm. Yeah, it's crazy right now. The crypto market is insane. So right now, Bitcoin isn't at its lowest, but
What is it today?
I think right now it's at 25,000.
Oh, it went up.
Yeah.
The last
so-
time I checked, it was like 19, 20, even 18.
Yeah. And at some point, it was at 16.
Oh, I messed up.
So, if you bought it at 16, you got some decent
I messed
cash on
up.
you.
I bought some at 50 last year.
Oh, wow. Yeah.
Just a little bit because of the hype. But what's crazy is that this is what I'm saying, man. Like, buy these dips. People said crypto is dying.
Nah.
Dude, it just went up.
Yeah. It's not dying. There's too much money into it. They are going after it as far as regulations.
You think that's going to mess it up?
I don't know. I think with anything new, there has to be some sort of cleaning up.
Yeah.
You know what I mean? Before it actually gets fully adopted. And that's what I feel has been going on the last few years. There's a lot of cleaning up. There's a lot of companies filing bankruptcy and all those things. And I guess the whole point of crypto is to not be regulated.
Right.
But if you're trying to have the common person be a part of it, then I'm sure you need some type of structure.
I feel like that support will help will help us who don't know much about it, but we're buying.
Mm-hmm.
Because I'm seeing we're investing and then these big companies are going bankrupt and then we're losing our money.
Yeah.
But if they're structured, that won't happen.
Yeah, exactly.
Right?
Yeah.
So it sucks. All right, I got a question for you, Mr. Crypto Man.
Uh-oh.
What was your best win in crypto?
Best win?
How much money did you put in and how much money did you make?
On a single trade?
Yeah, any time of your crypto career.
So total I made around 35,000, something like that.
And how much did you spend to get that?
I started off with 1,200.
Wow.
Yeah. And then I did over the time put maybe $3,000 to $4,000 into it.
Yeah.
Extra. But overall profit was 35,000.
Keep in mind, guys, we're not big traders here or big investors. No. We're just normal people with little money to play with. And to me, when you just put in $1,200 to get 35 grand, that's incredible. Like, and I think hats off to you, man.
Thanks, bro. Yeah, I think right now is another opportunity to start investing.
Yeah.
Obviously, do your research, and it's not. This isn't 100% foolproof. You got to take you got to acknowledge your risks here.
Yeah.
But I am starting to look into the market again, because there's a lot of new, I guess, technologies coming out, like AI and all those, and
like ChatGPT.
Yeah, and there's certain, I guess, coins or crypto that utilize those technologies or support those technologies that you can invest in.
Really?
So yeah, if you start doing your research and you find out which ones, then it might be worth it to take that risk.
Yeah.
If you have the extra cash.
Like, I don't even know what ChatGPT is. Do you have to pay for that service or is it free?
No, I believe it's free right now. Yeah.
Okay. So when they start charging people, that's when you can start paying like Bitcoin with it or Dogecoin with it?
Probably.
You know what I just saw? You know how Elon Musk owns Twitter? I just saw yesterday he started putting out pictures of the Shiba for Dogecoin, and he's starting to pump it again. And I like that. When I see it, though, I'm like, oh, I'm too late.
Yeah.
Because, that's when it's going up. I haven't checked to see if Dogecoin even went up.
Yeah, I haven't checked either. But everything's going up right now. Yeah, Bitcoin's at a really interesting place right now.
Yeah.
Where we have gone up from 16,000, and there are certain resistance points that it's starting to break. So people are starting to say, hey, we're starting to move to the upside.
Yeah.
We don't know what's in store for the economy, or if there's any crazy thing like COVID again or whatever that could cause Bitcoin to drop back down, because there is a support level back down at 12K.
Yeah.
And people are screaming 12K all day. And they think that the bear market is not done yet. But again, Bitcoin is at a point that it's going over those resistant levels, and that's why people are starting to change their mind. And what's crazy about it is the money is flowing back into these altcoins, like the AI.
Zinju chili is a crunchy garlic chili oil, aka chili crisp.
And what's really cool about the chili is that it's vegan.
Yes.
They have 2 batches. They have the OG batch, which is the normal spicy level, and then they have the X batch, which is really, really spicy. You've had it?
It's very spicy.
Oh, wow.
Yeah.
Which one's your favorite?
I love the OG batch just
Okay.
because I can put it on everything. Guys, Zinju Chili will send you guys a free 9-ounce jar. All you gotta do is cover shipping. So go to their website, zinju.com, or click the link in our description box and use a promo code WINNING for your free chili jar.
Technology coins or whatever.
Yeah.
And you're starting to see these coins pump 200%, 300%
Wow.
in a week. So
That's a lot.
it is a lot. And I remember seeing this same exact pattern back in November 2021, I think it was.
Yeah, that's when it got hot.
Yeah. So you kind of see this little steady climb where you'll see one coin pop off 100% or 200%, come back down. Then another coin does the same thing.
Yeah.
People are dumping their money into different coins. And then shortly after, that's when everything skyrocketed,
Yeah.
you know. And we're starting to get that same feeling a little bit.
This is what's weird to me. When we know what it was before, like highs of all time,
Mm-hmm.
right? And now it's half of that.
Mm-hmm.
And so when you say things are increasing and getting better, overall, it looks like it's still in a bad position because it's at half of what we were at.
Yeah, is that a bad position, though?
I have no idea.
You know what I mean? For some people, they see it as an investment opportunity.
Right.
So
Are you telling
it
me
might be a bad position if you bought at 50.
Yeah. You know,
You know what I mean? But-
and it's even in a worse position when you bought it at 50 and that company went bankrupt and now you're trying to get your money back.
Yeah, that's crazy.
Like, that's where I'm at right now. I got to file a claim with BlockFi. So I
Mhm.
have some Bitcoin and BlockFi, Ethereum in there. And at one point, it reached $100,000, over $100,000.
Mhm.
And I can't even take that money out because November 20-something of 2022, they filed for bankruptcy.
Mhm.
And now I got to file the claim with the courts to get my money back. I
Yeah.
see it in my account. I see how much Bitcoin I have, Ethereum that I have, but I can't take it.
Mhm.
It's there, but they won't let me withdraw.
Yeah.
You know?
And that's the thing is there needs to be some type of cleanup. And I
Yeah.
think that's what's going on. So once it kind of starts to clean up a little bit and things get a little bit safer or whatever the case may be, it might start a new uptrend.
Well,
And there's also, what do you call it? I think it's every 4 years or something. There's the halvening.
what does that mean? The
Um,
halvening?
Yeah. I'm not entirely too sure, but
Like, do you have any money? Halvening? Is that what you're saying?
I think it's I don't know. I can't really put too much input on that, but I know it's a big event with Bitcoin,
Okay.
and I think it's every 4 years, and usually around those years you start to see the market go back up. So they're thinking in 2024, 2025, Bitcoin's gonna reach a crazy high.
Well,
Yeah.
yeah. I mean, back in 2021, they were saying that Bitcoin was going to hit 100 grand, 75 grand to 100 grand.
Mm-hmm.
You think it's going to get back to that?
I think so.
So
There's potential for it to go crazy, 500.
well, then my 50 doesn't sound too bad, but I just can't take it out and get it back.
Yeah.
But that already tells me if the crypto world is going to be like that, and that's what you're anticipating, think about how real estate's going to get.
Mm-hmm.
You know, if that goes up, that means people have more money to buy real estate.
Mm-hmm.
And if they have more money to buy real estate, it gets competitive again. So equity goes up and we're out of this recession and now you're making big bucks.
Mm-hmm.
And another indicator about why this is one of the best times to buy is because as a realtor, I'm getting clients that want to buy a home with Bitcoin.
Really?
Yeah.
What?
So I've talked to other agents, my peers, and they're like, yeah, I have sold a home with Bitcoin,
Wow.
you know, but it's a little scammy because you don't know who's real and who's faking it
Mm.
because you don't really buy with a Bitcoin. you still kind of have to withdraw that amount. It's like you can't just say, here's 4 Bitcoins and buy a house. It's like, no, you still got to cash it out, give it to the escrow company, things like that. But they can use the account where it's coming from. You know what I mean? So, but knowing that you can use Bitcoin like that to buy a house, you know, all these investments, it's going to do really well.
Yeah, I mean, I don't know if I wouldn't say, depending on your situation, if we're in a recession or if we're going to go into a deeper recession or whatever, if you have money, it might be time to look at crypto.
Like, how much money should someone start with who's just the everyday person? And if they're trying to save up for something else, like, how much do you recommend them spending on this investment?
On crypto?
Yeah.
Well, on crypto, I would say what I do is I try to put in about 10% of what I save.
Okay.
Yeah, that's kind of like a starting number.
Nice. That's safe.
Yeah, but you know, if you already have a good amount of savings or whatever the case may be, and you're willing to start putting money in some type of investment, then I would, you know, look at your risk and do what you can. Do what you feel is safe.
Okay. So right now we're talking about stocks, crypto, and real estate. Which would be your pick to invest in right now if you had the money to do so?
If I only had to pick one.
Yep.
Wow. Okay. Real estate.
Really?
Yeah.
Even though crypto is so volatile, Tesla stocks are so crazy, you would buy a house.
It just seems the most secure, I guess.
Yeah.
Yeah. You know what I mean? Most secure long term.
The less riskiest.
Yeah, less riskiest. If I'm trying to make the most out of my money, then I probably start dumping into crypto.
Yeah. But you can also lose the most.
Yeah, you can also lose the most.
With real estate, you won't really lose. You just got to hold. I mean, okay, you know, I kind of bit too much that I can chew because obviously if you hold stocks or crypto for long enough, you'll be okay. But with real estate, you don't have to hold as long unless you're in a bad market, right? If you're in an area that never grows, like let's say buying a house in Compton, they're still in the 500,000s. Obviously, there are like 70,000 back in the days, but they're not a million like everywhere else is in Los Angeles County, right?
Well, with crypto, there's still a lot more risk because you could buy into something that ends up going to zero, like Luna.
Yeah. Why did you remind me of that? Yeah, I had that too. I'm a bad crypto investor, guys. Don't listen to me. Listen to Justin. He's good at it.
No. Don't listen to me. And it's not financial advice. But yeah, I mean, you could end up with the wrong coin, and
yeah,
and that's why, you know, people have been sketched out about crypto.
Yeah,
they're hearing about these bankruptcies and these companies crashing and these cryptos going to zero. But yeah, there was a lot of like scammy things going on back then, and like I said, things are cleaning up, and you know, who knows where all this stuff could go.
You want to hear one of my stupidest investment stories?
Yeah.
It has to do with crypto and Luna.
Yeah.
So my friends who are very heavy in crypto talked about Luna so much, right? And I was like, man, I'm late to this game. Why didn't I buy Luna? Why didn't you guys tell me to buy it sooner? You know, like I felt like they were hiding it from me, right? Hiding the profits. And so for like 2 or 3 years, I would say probably 2 years, they had this Luna that they were holding. And I finally decided, you know what? It's jumping like crazy. It doesn't matter if I didn't buy it at the very lowest. I'm just going to buy right now because it's going up, right? So I bought Luna, like 10 grand. And in 1 week, it went to zero.
Wow.
I bought it 1 week before it went to zero.
Wow.
I waited 2 years.
Do you know how much Luna you got for 10 grand?
I don't remember anymore.
No.
I don't even remember what the price was. It was like $113 or something, right? Something like that.
Yeah, something like that.
But I think I bought it at like 60 or 80.
And
I was like, Cool. It's going to go back up to 100 some bucks. Okay, guys, this is why Justin said he'd rather invest in real estate than crypto, because crypto will get you to zero, just like how I experienced it myself.
Mm-hmm.
Real estate will not go to zero because your home has value. People actually value homes.
Mm-hmm.
You know what I mean? All the work that you put into your house, this wall behind us, this took a lot of sweat equity. I put, days and days and days of work into this wall behind us.
Mm-hmm.
I'm not going to let it go to zero.
Yeah.
Right? So that's everybody in their house. Everyone just kind of loves what they work for. I don't think you really work for crypto. It works for you.
Yeah.
Right? So, yeah, I agree with you. Real estate would be my pick too.
Mm-hmm.
But what would I do with that investment right now with real estate? Should I short-term it, long-term it? What's the play here in today's world?
Yeah, that's always been my question too, like the short term versus long term.
I think it depends on the market.
Right, because whatever happens in the market could change your mind too.
Yeah.
Your house could pop off and you can get that equity, or not equity, but you could get that return by selling the house. Or if the market's kind of slowly going up, then probably a long term, no?
Let's see if we can figure this out right now.
Okay, let's do
Do
it.
you think people are spending money going on vacations right now, or are they saving?
Ooh, that's kind of a tough one.
Are you going on vacation?
I'm not going on vacation.
Do you want to?
I do.
Okay, so you have money to spend. For me,
I don't think so.
okay.
No.
Well, for me, I also want to go on vacation, but I'm in that zone right now where I rather buy investments. So I'm not going to go on the vacation. I'm just, I'll do something else where I can drive somewhere locally, maybe take the kids to Hoover Dam instead of going to Hawaii and spend $4,000. I'd rather buy a house. And so knowing that I do want to do something, and as well as you, I think other people are as well. I think we still have that COVID fever where we've still been locked up for 1 or 2 years that we all want to get out.
Yeah, I mean, I'm seeing a lot of my friends going on vacations. That's why I didn't know how to answer your question.
So
I'm seeing a lot of people going to Mexico, going to Europe, and all that stuff. And I'm over here like, I want to.
Okay, so
I kind of could, but I'm trying to save up for a house.
They did just open up travels, right, to go to Japan, Europe, all those things, right? So that is why people are traveling, which tells me the people who can't afford to go overseas are still trying to go somewhere locally, which means short-term rentals right now are still very good. Airbnb, short-term rentals, I think those are ideal at this moment. But the moment you see your friends lose their jobs, that's the indicator where it's like, okay, no one is going to Airbnb your place anymore. Now you got to do a long-term rental. Find someone who's going to stay in there for a year before you lose out.
I see.
So, yeah, I think we figured it out, right? Yeah. Everyone still has that fever to come out and party. So, we do have Q&As that we asked our listeners and fans on YouTube and Instagram. So I'm going to go on my phone and see these questions that we can answer.
Yeah, I got to grab mine too.
All right. So we've been asking everybody that whoever listens to our show, please ask some questions in the YouTube comments or hit us up on Instagram or even email. And anything that's real estate related, we'll answer those questions as long as it pertains to the topics, right? And so today I got a bunch of questions. Someone said, what is the best way to use equity for another home? Is it cash out or a HELOC? Because they're looking to invest. Yeah. Right? That's that question right there.
Yeah, that's a question that I've always wondered too. Because I always hear people saying, oh, I took $200,000 out of my house and I bought another property and this and that.
Yeah.
And then I've heard people say, don't do that.
Right. So the difference between a cash out and a HELOC is, well, both of them, first you need equity to do both. A HELOC is a home equity line of credit. It's another loan. It's a second loan on your home. So you can, if your house is worth, a few $100,000 more and you want to take out $100K, you can take out $100K and it'll be a loan and you got to pay it back in monthly payments. But you'll have the $100K in your bank account. And when you decide to use it, that's when you get charged the interest. If you don't use it, it just kind of stays in that account until you do. With a cash out refi, it's doing an actual refinance on your home and you're getting that cash at closing. So now your mortgage payments are going to be higher because you took that cash out, but you have that cash without having, I would say, a second interest rate.
I see.
And a second payment.
Yeah.
So it's just one payment. It's like you're paying your mortgage all over again, but you got the money back. So I kind of like doing a cash out more than doing a HELOC because I got to just worry about one loan rather than two loans. The two loans might be a little bit scary. So in terms of if this guy is going to use his money to invest and not dump it somewhere else and buy a car or something, then yeah, it would be a great idea to utilize that equity.
I see.
And I would say a cash out. That would probably be your best bet. But if you're some guy that's like, you know what? I want to get money that I've never had before, and I kind of want to buy a house for investments, or I kind of want to buy a Ferrari or a Rolex, I wouldn't take out any money because you might not be able to control yourself.
Yeah.
So for the one that's just laser focused on buying an investment, go for it. So that was a great question.
Yeah, that was a really good question. So basically I asked what concerns you about today's home interest rates.
Yeah.
And one person was like, not having a home or getting the opportunity to buy a home.
What does he mean by that?
I guess just because everything's so high, not being able to afford a home or whatever. But I'll read you something else too.
Read his whole thing.
Yeah. I'll finish what he was saying. So what he said was the unnecessary pain, struggle, and suffering families will have because they can't get a home, while greedy mortgage companies make so much money off your own struggles. It's like a war, except it is happening in your own neighborhood, while they profit off somebody else's life, basically. And then his concern was that mortgage lenders won't be held accountable.
I would say part of that is true and part of that is not true. So, one, I agree, the mortgage lenders will not be held accountable because they can't control anything. They don't control the rates. When the Fed say they're increasing rates, it increases, right? There's nothing else anyone can do. But when he's talking about, people can't afford a home because of the interest rates, well, you can. You just have to lower your standards and sacrifice for now until you get to the second home.
I see.
Right? So down payments don't really matter about interest rates. If you have money saved up for a down payment, you're going to use that. The interest rates are based off your monthly payments. So I guess you can't use as much down payment since you got to save some for monthly payments that are higher. But at the same time, right now as realtors, we're all negotiating, interest rates going down by 2% for buyers, right? It's called a 2-1 buy down program. If the rate is 6% today, the seller is helping you buy it down at 4% for your first year, 5% for your second year. That's a great deal. If you can get a home right now for 4% in your first year, you can afford that home. So there are programs out there that can help you and assist you in buying a home. You just need to speak to, experienced lenders and realtors who can actually help fit those needs. But if you don't talk to anyone, for sure, you're just going to think, I can't afford it. How do you know? Have you talked to someone? Have you calculated things? They calculate it for you. That's their job, and they're not charging an arm and a leg for it. A lender typically charges 1% of the purchase price. So if you're talking about a $300,000 condo, that's $3,000 for them giving you a loan.
Yeah.
That's great. You know what I mean? So, and if you go with big banks, it'd probably be even cheaper. Some don't even charge fees.
Wow. Okay.
Yeah.
Yeah. I feel like it's such a deep topic, and it is a concern for a lot of people. You know, at least for me too. Looking at what I love about Zinju chili is that you can basically put it on anything.
Yeah. They don't use traditional Asian ingredients like
Mhm.
fermented black beans or Szechuan peppercorns. So you can literally put it on every food.
Yeah, I put it on my eggs, put it on my tacos. I even use it for barbecue sauces.
Damn, there you go,
Yeah,
man.
it's amazing.
So the owners, Zin and Andrew,
Mm-hmm.
they actually use it on In-N-Out burgers too.
No way, I gotta try that.
Yeah, I'm
Okay.
down. So guys, go to our link in the description box or go to zinju.com. Use promo code winning to get your free jar of Zinju chili.
The interest rates and home prices and things like that, it does feel unattainable, but also it makes me think of what type of house am I looking at?
Right, you gotta
You know
live
what I
within
mean?
your means.
Right.
Right.
Okay, am I trying to buy that dream home?
Yeah.
Because of course I can't afford it, you know. But if I downgrade a little bit and buy what I can afford, then I can purchase a asset.
Right. It's expectation versus reality. Right. If it's just you and your girlfriend right now, do you need a 3-bedroom, 2-bath house, 2,500 square feet?
No.
You can probably live in a 2-bed, 1-bath condo for half that price. And if you want, buy an investment property or a business or something else, or just save, you know. But everyone can buy a home if you just really tone it down and not think about, the blinging diamonds in your eyes. Like, I want that pool.
Yeah,
And
yeah.
not only do I want that pool, I want an infinity pool.
Mm-hmm.
Like, you don't need all that. That's why they sell these above ground pools at Walmart that
Right.
a lot of houses have. There's no shame in that.
Mm-hmm.
Until you can really afford something, then that's when it's okay.
Mm-hmm.
But it's okay. It's a stepping stone process. Just buy your first home, live in it for a few years. Once we're out of this market, you can sell it, make some money, double the size, and then that's when you have your dream home.
Mm-hmm. Now, is there any time where people really lose bad on a home
When they can't make payments,
and they can't make
is
payments?
that like a foreclosure?
I guess what I'm trying to say is I've seen one particular property
Okay.
where this thing was at 700,000
Yeah.
and I seen it on the market for 200.
What
or
was wrong with
230.
it?
I'm not sure, but that was something different that I've never seen before.
There's a lot of a lot of scenarios that can be put into that.
Got it. Yeah.
Now, if it's worth 700,000 and it's at 200, is this like an auction?
This was just on Zillow, just looking at the price history of what it was sold at.
There's got to be liens on it. Maybe they didn't make a house payment for the last 2-3 years.
Mm-hmm.
So now you got to pay for cover those last 3 years of payments. They might have some other liens. Maybe they did construction on the home. They broke stuff down and tried to build it, and then they never paid the contractor. And now they owe the contractor $100K. Now they have a lien on that. Maybe they haven't paid taxes. There's tax liens, property taxes. There's a lot of stuff that can quickly add up to 300,000 to 400,000, making it 700.
Mm-hmm.
Or even you'll probably get a good deal on it, like $100K less, but it's gonna be pretty close to that.
When people are looking at interest rates and they're going from 6% to 4%, how much is that saving them?
It depends on the purchase price.
Right, of course.
Right. So the more expensive the home, the more you save, right? The bigger amounts that are significant.
Yeah. But like, let's say, if we could just play with some numbers.
Okay. Let's say a $600,000 home. And if the rate was 6% and you refinance for 4%, how much do you save? I would say now I'm not a lender,
Yeah.
so this isn't accurate,
Yeah, it's just.
but based off my experience of owning homes and refinancing things like that, I would say about $600 to $800 a month.
Oh, okay.
it also depends on your down payment.
Yeah, of course.
I'm talking about like 20% down payment,
Mm-hmm.
right? So, yeah, about $600-$800 a month. I've done a refi back in 2020. My rate was, I think it was 4%, and then we got it at 2.75 or 2.875, and I was saving $400 a month instantly.
Mm-hmm.
You know, that's very helpful.
Mm-hmm.
Like the moment I did that, I was like, I never want to sell my house ever. I'm never gonna get this rate again. What a deal! And I'm living in that home, and I'm like, man, it's kind of small. I got 2 kids.
Yeah, you're building a family.
I got a buddy living in my garage because we built out an ADU. So we don't have a garage there. It was just, and then I didn't want to spend the money to expand even more. So I figured, why not sell while the market's hot? And that's what I did. But I didn't want to sell that home. It was such a good deal. All right. Somebody asked, how do you know when is the right time to start buying a house? Well, if we're talking about investments or for owning, both kind of have the same answer. When you can afford it. If you can't afford it, don't put yourself in that situation. It's very stressful. You're not ready. But like I've been saying on every episode, anyone can buy a house. You just have to lower your standards. You know what I mean? And so if you can afford it, that's the best time. It doesn't matter what the rate is, what the price is. We'll find you a good deal. We'll find you some negotiations to get the rates down. But in the end, when you can afford it, when you can qualify, meaning that you have a good job, you're not going to lose it, that's the best time. Because there's moments where you guys are saving up and then you lose your job. Now you don't qualify for a loan. That is the worst time to buy a house. So I think it's when you have a secure job for the last 2 years and your taxes look great, that's the best time to buy a home. It's when you can qualify. Yeah.
Got it.
So it depends on everyone's situation. It's different. But that's, when you qualify is my answer.
I have a question. I don't know if it's kind of complicated or if it even makes sense. So I guess the American dream is just to own a home. Do you find people coming to you more so to own a home? Like they just want to buy one property, they're going to own this home forever? Or do you get a lot of people buying investment properties?
I can tell you what people think that they want to do, and I don't know if they can ever reach it, just like me. Everyone comes to me and says, I want to buy a home, and when I pay it off, I want to rent it out and buy another home. Well, I've been a homeowner for about 7 years now, and I've never paid off a home.
Yeah, that's kind of what I've been seeing,
And that was my idea, too, when I first bought my house. I wanted to rent it out after I pay it off. But I never pay them off. It's hard. My grandpa, he died when he was like 90. He just paid off his house a few months before he died.
That's crazy.
You know what I mean? He was 90 years old, paid off his house, and then died. That's how hard it is.
And it makes me think too, like when you hold these houses for long term, are you paying more in interest than what the home's going to be valued at throughout the years?
It depends on where you bought the home.
Because it almost seems like it's not an investment long term for the full term.
Let's say if Summerlin in Nevada is the 4th fastest growing city in the nation at one point, that equity will increase by a lot. So let's say the houses go up 400 to $1 million in a 10-year period. But your loan amount, you're only paying $180,000 in interest. I mean,
in those 10 years?
In 30 years.
In 30 years?
You're making way more.
I don't know, because I did, and this was probably so whack, like the calculator and all that stuff.
Where did you get this from?
It was online, but
Okay.
it seemed pretty legit. It had like a bunch of different calculations. It also gave you all your payments for the full 30 years, how much you're gonna be paying down each year or whatever.
What did it say?
And I think it was a $600,000 home.
Yeah.
With a 6%, 7% interest rate.
Mm-hmm.
For the full 30 years. I think you were gonna be paying like 400,000 in interest or something like that. Am I tripping?
Maybe.
I don't know.
I haven't calculated something with that high of an interest rate for over 30 years to see that. For my own house, it was 600,000. My previous house, and it was at that 2.75% or 2.8, and it was like 180,000 in interest over 30 years. I was like, yeah, damn, that's expensive. But I also made 400K off that home when I sold it. Yeah. So if in 30 years it'd be worth way more than that 400K that I got. I'd probably be times 3.
Really? Like you don't feel that was just a spike in the market and then it's just gonna cool down
and spike again, and then spike again?
Yeah, but where is it spiking to? Like
there's no limit.
Based off of yeah, true, but based off of, like, for example, like my parents' house.
Yeah.
Right? It seems like, I mean, I don't know what their interest rate is or whatever, but it seems like the value of their home, because of where they bought and all that stuff, is basically the same value that they've put in with all the repairs, with all the interest and all those things. Their house didn't really go up that much.
That's why I said it depends on the market, as in your location. So in LA, there's always high demand, right? So equity is always jumping. Sooner or later, every home in LA County is going to be worth $1 million, if not already. It was very close at some point. I sold my house in LA County for almost $1 million. So in 10 years, will it get to $1 million for every home? Very damn close. In Vegas, I don't know, not yet, but maybe in 30 years it will. Until there's no more land available, and the cities, this is what happens. So in LA County, there's already no more land, right? No more homes to build. So people are starting to build homes in homes on the same lot. They're making duplexes, triplexes, multiplexes. Now we got to the point where they're doing ADUs. If you don't know what an ADU is, it's an additional dwelling unit, meaning it's another building in your lot that you can rent out or whatever it is. But basically, it's 2 homes on a lot. Now you can do 3 homes on a lot, okay? Because there's no more space to build new homes. You can only do it in your backyard. So that's why home prices are increasing and the value is increasing, because now people are house hacking. I can live in my own home. I can rent out this ADU that I just built in my garage. Or I could have my mother-in-law live in here for free. It's worth more value to me that way. But either way, it's valuable. So now people are paying a lot of money for those type of homes. It's supply and demand, right? Until Vegas gets to that point. Right now, there's still a lot of land in Vegas. We can buy land right now and hope that one day we'll cash out when a big company wants to buy it, build a casino on the land that we bought, But it's getting there. Summerlin, they're only allowed to build so many homes, and that's why it's increasing so fast. Vegas is not very big. You can go anywhere in Las Vegas within a 20, 30-minute drive, right? From North to Henderson to wherever, right? And until all the homes are built and there's no more land, that's when the market is great. That's a great area to buy, and it increases. But right now, because it's still like half rural and half, tourist, it's a flip-flop right now.
I see.
So the fact that your parents' house went up a couple $100,000 since the 90s, that's pretty good for what it is. If we're in LA, it'd be different.
Right.
So what you're saying about that calculator, it depends on where you're buying your home.
Yeah, yeah.
You know,
I was just like, because we always talk about him paying off the house. He just wants to pay off the house.
yeah,
Very, that old school kind of thought process. You know, get rid of debt, which is amazing. You know.
yeah,
But it just had me thinking, like, how much interest did he put into this house over the 30 years, versus what the house is worth now?
yeah.
And then also with the repairs and all that stuff. Like, did he just come out even at that point? And I guess, like, the upside to that is, you know, he would have a home forever once he pays it off, whatever.
I think the upside is that, you know, he can pass it down to you guys.
Yeah, that too. You know
right.
what I mean?
So
So that's a great upside.
yeah.
I'm just thinking, I'm not saying that it was a bad investment or anything like that.
Yeah.
I'm just trying to see the monetary aspect of it.
If it was
of,
worth
like,
it.
Yeah.
I mean, so you're saying that is it better to pay all that interest in hopes of the market going good for you, or just pay rent and not have to stress?
I'm just speaking in terms of owning a home.
Oh, I thought you meant
long term. Some people, some people are just like, I just want to be a homeowner.
Yeah.
And I'm gonna, work these 30 years to pay off this house.
Yeah.
Okay. And then now they have this asset. And in my head, I'm like, okay, with the repairs, with upgrades, whatever, and the amount of interest that I put into the house, am I going to break even monetarily? Or, I mean, it's not going to really matter because I'm going to have a home. I could give it to my kids, whatever.
Yeah.
Just money wise, like, is it really an investment at that point? Or are you just working your ass off to pay off a liability?
I think when most people buy a home for them to own and live in for the rest of their life, they never think of it as the investment side. They never, ever say, I'm going to make so much money in 30 years.
Mm-hmm.
Never. What they say is, I'm going to pay it off and give it to my kids.
I see.
So that's what they're paying the interest for.
Mm-hmm.
So to me, when they think of it that way, it is so worth it. Because even if my kids want the house or not, who knows?
Yeah.
They might not want that dump.
Yeah, they just sell it and get the money.
Or they might want to move to, out of the country.
Yeah.
Maybe my kid wants to live in Paris instead. But they can do whatever they want with that house. If they want to sell it, Airbnb it, they can do something. They can buy a business with that money, and what's good about it is that by the time they get that home and they sell it, they're normally, if God forbid something happens to you, but if nothing happens to you, you live a normal life, they will be at an age where they have always dreamt of doing something or owning something.
Mm-hmm.
And that house will get them to that.
Mm-hmm.
Can you imagine at 30 years old, 40 years old, you've struggled your whole life trying to own businesses and inventing things and all that,
Mm-hmm.
and you never had the money, and all of a sudden, you inherited something and you're like, whoa, I can finally do this.
Mm-hmm.
Like, that's what it's
cool.
for.
Yeah.
It's like, yes, son, go do it. Here, I'll give it to you.
Mm-hmm.
You want to start your own, I don't know, basketball team? Here you go.
Yeah.
Like, I don't know. You know what I mean? You want to, whatever. You can make their dreams happen.
Mm-hmm.
And what I'm saying that is so great is because of their age.
Mm-hmm.
If this happened when they were kids, then you don't know how they would turn out. Spoiled brats, you know how that goes, right?
Mm-hmm.
But once they've struggled and then they get some kind of inheritance, it's pretty cool. Thank you guys for watching today's podcast episode. And for you guys not on YouTube, thank you for listening on the podcast platforms. Give us a like, subscribe, follow. Let us know how we did. Also, if you guys want some Q&A questions to be answered, please write them down. You can email us, thenextwinpodcast@gmail.com. Also, subscribe to us on Instagram and TikTok. Next Win Podcast. Come find us. Thank you, Justin Vaseur. You were great today.
Yeah,
I
it was
loved
fun.
the talks today. I think I learned a lot from you in
Yeah.
crypto.
Okay. You trying to buy some Bitcoin now?
I think I should.
But yeah, also don't forget to check out our sponsor in the link below.
Don't forget to check out our sponsor, Zinju Chili. They're going to send you a 9-ounce jar for free. All you got to do is go to their website, zinju.com, or click the link in our description box below and put in that promo code WINNING for your free 9-ounce jar. Thank you, Zinju Chili, for sponsoring this video.